Esta es la fotografía, mientras, como decimos, queremos acercarles al último informe que ha desarrollado el ISM sobre las previsiones para la economía estadounidense, para su actividad económica en 2023, y hablamos con el que es el jefe del ISM, del PMI, manufacturero del ISM, es Thimothy Fiore. Ya nos ha acompañado en ocasiones anteriores. Thimothy, thank you so much for having us a few minutes. Good afternoon from Spain. Good morning for you.
Good afternoon, Martha. Good to see you again. Thanks for having me.
Timothy, economic improvement in the U.S. will continue next year in 2023, according to your last report. In general terms, which evolution do you expect in manufacturing and services in the coming year?
Yes, so twice a year we do a forecast of the upcoming year, and one of those two elements is also an update in May. So this is an important point in time of the year where we take a look at what's going to happen in 2023 from the panelists, and we look at where we actually are today. Now, remember, we have a monthly call on the PMI that really reflects the month-over-month activity. The last time we had the conversation was for November, and the November ended a 29-month streak of expansion in U.S. manufacturing, and for the first time in 29 months, we actually went into a weak contraction. So this is a very interesting report. The panelists come in, and the summary is that business continues to grow as we enter half one of 2023, but at weaker rates as manufacturing predicts that the worst economic period in 3 years is now approaching. So that's important, but the primary thing here is that it's not a steep fall off. So we do believe, though, that the half two of 2023, the second half, will perform better than the first half of 2023. And as prices continue to stabilize, employment sees a kind of a plateau, and new orders start to come back again. So we're entering a 6-month period here where we're probably going to remain in some amount of weak contraction. Okay, that's fine. We also take a look at what's happened in the prior 2022. Interesting enough, we believe that we grew our employment levels by 2.8% compared to the end of 2021. But by far, two of those 2.8 points we saw in the first half of the year, and we've only grown our employment by less than 1% in the second half of 2022. So that reflects the fact that we've had hiring freezes in place, and we're now in a period where we're starting to lay off some of the manufacturing people. So it's a really important number, I think, the forecast for 2023. We believe that revenue is going to grow about 5.5% in the manufacturing sector, consistent with the CPI number. But we also are following up here in a 9.4% growth in 2022. So overall, the message is pretty good. It's not catastrophic. We're going to continue to grow at similar rates that we're closing this year on, and half two will be better than half one.
Timothy, we saw a contraction in the manufacturing sector in November. We did an analysis of this data with you in that moment, but you forecast that the US will see an improvement in the second half of next year. Which factors will drive that improvement?
So a couple things here. Probably the most important one is the business comparison. We compare the end of this year to the first half of next year, as well as the second half of next year. And in both cases, the first half of next year will expand slightly, but the second half will expand at a 2 or 3 times the expansion rates in the first half. So that's very positive. I mean, the business community is essentially reflecting that there's a lot of weight and pressure being put on the manufacturing community through the lack of new orders, the excessive supply chain activity that we had, the Federal Reserve increasing interest rates. We believe that the biggest impact will be in the next 6 months. It's not going to be a seriously dramatic impact, and we think that in the second half of the year that we're going to get back into a decent expansion level. One of the things that's really interesting is the prices. Everybody's watching our price number. So we asked the community, okay, where do you think you ended up in 2022 from a price standpoint? And we came in at 14.1% price growth for the entire 2022 period. That's a huge amount, but it's very close to where we thought we would be in May. So, but more importantly, we asked them, what do you think is going to happen in 2023? And what they're saying is that by the end of 2023, we're going to see an additional 2% price growth, which is really good considering where we're coming from. and that we'll see the majority of that price growth. We'll actually see a 2.4% growth from between now and May. So we're going to, again, run up 2.4% in the next 5 months, and then we'll run at that level and actually come off of that level by about 20% to a 2% level throughout the rest of the year, and then end the year at a 2% level. So I think that's really positive. It kind of supports the fact that we still have some inflationary pressures in the first half, and that the second half will be more positive from a revenue standpoint as well as from a profitability standpoint. So, you know, I was waiting for this report, this forecast, this prediction from the panelists. There's a lot of uncertainty out there. I think in the end, what the panelists are really saying is that, you know, we don't expect a very significant recession in the U.S. economy, and we don't see ourselves essentially falling off a cliff. We think it feels more like a soft landing in 2023. We're going to see a little bit of pressure in the first half, and the second half will be running at a pretty good rate.
Well, Jerome Powell this Wednesday talked about this soft landing. He says it's still possible. And my next question is about the Federal Reserve, because I wonder how are the Fed rate decisions affecting these prospects for the U.S. economy activity?
Well, you know, I can't speak for them, but, you know, looking at the numbers here, I think it's pretty positive from their standpoint. You know, we're going to see inflationary pressures on material costs at a 2% level for 2023, down from 14% in 2022. That's dramatic. That is definitely going to make them feel better. But we also asked a question about wage and benefit expansion in 2022, and more importantly in 2023. And we think that we're going to see wage and benefit expansion at a 5.8% level in 2023. That probably doesn't make them feel very well, and that number is pretty much baked into everybody's business plans for 2023 already. Those are merit increases, special bonuses, retention bonuses to keep people. So, you know, that's probably not a very positive thing. But on the other hand, we are predicting that we're going to grow employment levels in 2023 also. So we asked the question, you know, we're, like I said, with 2.8% employment growth in 2022, with the majority of that by far being achieved in the first half. Second half's been slow, but we do believe we're going to grow employment levels by 3.9%. Sorry, I keep looking down, but I'm looking at my numbers. 3.9% employment growth in 2023. So I think they would like to have seen that number being a lot less. So you got wage and benefits up 5.8%. You got employment growing 3+%, almost 4%. But on the positive side, you got prices at 2%, which has got to make them feel good. So it's a little bit of a mixed bag, but you know, it is what it is. The panelists, I think we've had a pretty good track record of doing a good job on forecasting, even in spite of you know, the crazy pandemic period. I think in the last year and a half, we've been been pretty accurate. Let's talk a little bit about manufacturing efficiency, but more importantly, CapEx, and that, you know, that's an investment for the long term. We think we ended the year this year with a CapEx expenditure, capital expenditures of 12%. That's a huge number on top of a 12% growth in 2021. So in the last couple of years, we've expanded our CapEx budgets by almost 25%. Really positive. From a CapEx standpoint, you have to look long term. You have to look multi-year. So we've had a really big investment in 21 and 2022. In 2023, we're going to come down to a 2.6%. Which is a pretty good number because I've seen numbers like in the pandemic period, when we asked the questions back in May of 2020, we actually saw a negative investment where people were pulling, you know, they weren't going to spend as much on capital compared to the prior year. This says that we're going to continue to spend more on capital. Now, it's not a big number, almost 3%, but we're spending more nonetheless. So that's got to be positive. The business communities, the manufacturing community is saying that 2023 is going to be the most difficult economic year that we've had in a number of years, but it's not going to be catastrophic. And on the show that I have with you, I've been feeling for the last 2 or 3 months that we're going to be running a PMI level of 48 to 52. And remember, 50 means same month over month. So we could be slightly contracting, we could be slightly expanding. We're kind of in that mode, and this forecast kind of confirms that. We also asked the question about what do you think the next 12 months will look like in terms of demand and performance. And our panelists came back and said, we think it's going to be the same as where we are now for the entire 2023 period. So They're not saying it's going to be worse. They're not saying it's going to be considerably better. They're saying it's going to be the same, which I think is it's a pretty positive message, given the uncertainties we have out there in terms of demand and what the Federal Reserve is going to do on interest rates, and the fact that we're in a quantitative tightening mode here, where they, continue to pull money out of the system through the bond markets.
As you say, Timothy, a positive message given the uncertainties that we have at this moment, and well, these are difficult times for projections, but we try to do our best. Thank you so much, Thimothy Fiore, Chair of ISM Manufacturing IPM. A pleasure, as always.
Thank you, Martha. Have a Merry Christmas to you and your listeners.
Pues bueno, nos quedamos por tanto con esa felicitación.